Nasdaq down 2.73% last week made my prediction for a green week totally wrong. Will I be able to get back on track, and will I be able to pick some strong gainers for the last 2 trading weeks of this year? I don't know. As usual, I will try my very best. You're listening to the StockInvest.us podcast trading tips with Jim, and I'm Jim. And for the next 30 minutes, I will guide you through what I think will happen in the week ahead of us. Tell you a little bit about the things I think you should look out for, and by the end of the podcast give you some trading tips and even tell you what I will put my money on. Because in this podcast we actually do it, we say it, we do it, and we let you know exactly how things went. And last week trading tips was Chevron. Chevron was up quite much, then started to fall. The question is it still in the portfolio? And how did it actually do? I will answer that and so much more. Just stay tuned. There is only 2 small weeks left of 2022, and then we will be in a new year. We will try our very best to get the last 2 weeks correct, because last week I was very wrong. I thought it could end green, but Nasdaq ending down 2.73% and Dow Jones ending down 1.66%. Nasdaq is now at 10,705, and I told you the support at 10,600 is very, very important. Now, we have the week ahead of us, a shortened trading week, and then there will be that small week last week of 22, and suddenly we are in 23. I will start with 23 because I hope that you will pay attention to the things I say now. So I told you, and you can go back, listen to my podcast, I told you there would be inflation. I told you there would be a recession. Everything happened just like I told you. The war in Ukraine came just like I said. And I've been lucky to be correct about all these things. But I also told you that after when inflation peaks, we will get into recession. I said that 2023 will be a recession, and it will be a very hard one. Now, more and more of the experts seems to join my idea that we are heading for a recession, a stagflation. And in this market, there will be hard to be very successful in the stock market. To be so, you have to be very, very good, or you have to put your bets at a very good place. Before the economy turns, stock market will turn. So I believe stock markets will turn in 23, but I do not know exactly where. As I told you, I think Nasdaq will have to take the fall all the way down to 8,000 points, have these 3 major falls, and then we will be done with it. I don't think it will happen now, but who knows? Could be it starts this week. Or more likely it will just start as we enter new year. Hopefully I'm wrong, we turn up, because Nasdaq been moving sideways for some time now. Still fair chance that the markets can just go up, and this is the bottom. But deep down, I do not think so. I think we should be embraced for more. Red. Now, as I said, there are opportunities, and for sure you can reduce your losses if you do a few things. One of the things that I would do for sure is to stay into what is called recession-proof stocks, or stocks that can handle a recession better than anything else. I've been mentioning this many times, but now it is more important than ever. What you will see will happen is that you will see US had strong labor markets, money spending been somewhat good, but suddenly all of that will disappear, because at some point interest rate hike will simply be too high. It kills the economy, and the inflation and all the other things also accumulate to that point where people just suddenly almost like out of nowhere cut their costs very, very hard. and you will see huge drops in anything from subscriptions at Netflix, wherever it is. It will just be like that. People stop going to restaurants, and the inflation and the recession stocks will be the place where you want to be. So what are the things that will be not bulletproof, but let's say better in this period? Well, it is where we spend our last money, and that is utilities, that is groceries, sorry, the necessities that we have to have. These are the stocks that will hold the very best, because we have to buy bread, we have to buy milk, we have to do certain things. These stocks, they will be able to put more on the cost on you, because we simply have to have it, you and me. So this is where you want to have half your portfolio for sure. In addition to this, you can look at stocks that have very strong fundamentals, meaning that they have great revenue, they have great net profit, and are dividend payers. Especially, I would go for stocks with low PE, meaning that they already have taken some beating, because that will also help you get some dividends and be in stocks that already been hammered but have very solid economies. It's good signs. It's a good place to be. It will reduce your risk, because if I am correct, trading in a downturn market will be hard. All over this year, you heard weeks after weeks of green trading tips. And it's not just pure luck, it's simply because we play longer lines. So reducing your risk is very, very good, because that enables you to have a part of your portfolio where you can be a little bit more risky. And a little teaser. Sorry for the coughing. I'm just recovering from COVID. That's why I still cough a little bit. A little teaser about trading tips. I will take a little bit more chances, because statistically last part of the year holds some opportunities. So we will try a small gamble, and we will get back to that very shortly. Now, what else is there to do? Of course, you can do like I told you last year, go into weapon-related stocks, because that business is just blooming. As the recession will creep in all over the world, the governments will still spend money on building up their forces, their armories. There is already brewing a huge conflict with China, which I think will happen in 2023. So armor industry is also a place where you want to be. Now, let's say that you think some of these Lockheed Martin or whatever company it is a little bit too high for you. Remember, you can go down the chain, because there will be suppliers for Lockheed Martin that is making insane money. And here comes another tip. Most likely raw materials will be having a surge in prices next year. That's going to affect the sub-suppliers to all these big industries, and I think some of these sub-suppliers actually can do very, very well. As raw material will get into a squeeze, the cost of certain components will be very high, will make for a somewhat okay profit in some of these segments, especially anything electronic related. So if you're able to go down the chain, pick out these companies which deliver to the weapon industry, I think some of these could do very, very well in 2023, because the governments will still be spending money, and they will be willing to pay almost whatever it takes to armor up. And just to give you a little bit more insight into this, we know United States is sending all they can of weapon to Ukraine to prolong the war as long as possible. And this causes also US armor inventory to go down. The amount of Stingers they are using, the amount of other rockets they are using, causes the the inventory to go down, and they'll have to restock to prepare for the upcoming conflict with China. So there should be huge still upside in anything weapons related. Ethical, it is not a nice thing. It's borderline disgusting, I would say. But you can avoid it or you can play on it. It doesn't matter what you think, it will not change the world at all. So if you play it, you are able to stay longer in the market, as it soon will come to an upturn. Anyway, that was 2023. We will have more time to speak about that. Let's focus a little bit more about the week ahead of us. Nothing majorly coming out this week. It is price consumer expenditure numbers. It's the biggest number. I think it's tomorrow, and could affect the market a little bit, despite I do not think it will do so. There will drip some housing numbers and other thing, but in general, nothing major is coming. Oil is moving up, $3 last week to 74, but it was up at 80. And so remember, I said last week I would buy Chevron because I think there will be a rebound in oil, and that very low oil price should hold a good support below, meaning low risk with a potential huge upside. I still stick to that, and I can only give that as an advice. I think oil really good rebounds, as I think energy prices will just explode very shortly. Finding that exact day when it happens is very hard. I do not even try to it. I'm just saying it. I think it will happen. I position myself into these things with the expectations that it will be correct. And so far I've been very lucky, and hopefully that will be the same thing. I think it's a fair chance energy will be the place where you want to be, and there is more than oil stocks when it comes to energy. Gold up $8 last week to 1,807, and the treasury yield, 10-year treasury yield, fell a little bit, staying around 3.48 as is. All of this brews for, I would say, high chance for a good end of the week. Before heading to the signals and before heading to the chart and slowly moving to trading, tips for the week ahead of us. There will be a few earning reports this week. Some of them are interesting. It will be Nike tomorrow on Tuesday, and the same thing with fuel cell energy. I believe could be huge movements in fuel cell energy. Just a small trading tip there. You just have to find that very right entrance point. Of course, you can also look into BlackBerry also tomorrow. Then it will be Carnival Cruises on Wednesday, and interestingly enough, interesting company. You can have a look at that. Nike, BlackBerry, Fuel Energy, and Carnival will have quarter results this week. Going to StockInvest.us, type in the ticker, and you will find earnings where you can see how they were moving before and after earnings. Some of these stocks follow a certain pattern, and you can trade that pattern. It doesn't have to happen the same all the time, but in general it can give you a slight idea. Now let's round up everything and get to a conclusion for the week ahead of us. At StockInvest, we analyze more than 30,000 tickers, 26,000. Some of them are qualified for signal analysis. And right now, 25% of all the tickers that we analyze give buy signals. It was 32% last week, down to 25%. We like that much more. Nasdaq at 18 and New York Stock Exchange at 21 is something we really like to see. Nasdaq down from 25 to 18. 18 getting very close to an extreme obvious buying point. Now, like when it's high and it's low, it doesn't have to happen, because when it's low it can even fall much faster, so it's not guaranteed. But I'm just telling you, everything indicates in that number that there should be an opportunity coming up very soon, if it's not already here. Based on the number and based on a few other things, I will take a little gamble. You'll hear more in just a few seconds. London fell from 29 to 20, and Tokyo from 35 to 27, and Shenzhen, China from 34 to 29. So all of the buy signals fell last week. We are getting into a place where things are starting to get oversold. Much more interesting place to be if you want to be lucky, because being lucky in something that is going up is 10 times easier than in something going down. Now we see signals are somewhat okay, but what about the chart? Now I told you that Nasdaq is balancing just above the 10,000 support level. 10,600 it's actually from 10,003 to 10,600 is a huge support level. Very important that we stay above this. In the chart there is a few things to mention. First off, there is now turning out to be a double bottom, indicating that Nasdaq should go upwards to 12,000 points. There is buy signals from the short-term moving average. The relation between the short and the long-term moving average at the given back in November just turned into a huge sell signal after the last week's break, but heading down to the support gives an idea that it might go up. The chart itself just shows that Nasdaq is moving sideways, slightly upwards trend you can imagine. More important is relative strength index is low. It continues to be low, and at some point this will brew for an upturn. Support 10,500, and that is most likely where it will turn up, but when it turns up it will face a lot of resistance around 11,000 to 11,200. So unless there is something special, we do not see any real fast movements upwards. I've been watching many charts, and I know that sometimes the chart cannot tell you exactly what will happen, so you have to go with a hinge, a feeling, and guess and hope that it will be correct. Now the things that I like to focus on is that the 10,500, very important to stay above this level, because if it breaks down below that level, things can go so fast bad, and then I talk really bad. I don't know if any of you have been with me with the stock markets as long as I have, but when you have seen real falls, when they have to close the exchange, it's not a pretty sight to see when markets really crashes. If falling below 10,500, I think exactly that is what is going to happen, that the markets will really be hammered. But until that happens, it's a fair chance that the market will go up. Now, if it goes up, as I say, it faces a lot of resistance above, so it is not much likely. The most likely scenario is that we will have a short-term reaction up over the first few days now, where it will test the resistance and we will see how strong it is. If it managed to break above 11,200, it should move much faster upwards, and especially above 11,500, then we should have that huge move to 12,000. Now, as I said, the amount of signals is becoming very low. We see the same thing in the relative strength index. Makes me believe that there will be a short-term bottom here. Last week I thought it would be a green week. I will stay with that. I think it will be a green week this week. And I hope that we will see that some of the signals given will turn out to be false signals. Conclusion for the week, a bit messy logic and arguments here, but the conclusion for the week is that we will head for a green week. I think it could even be a nice one. I base it on the low amount of sell signals. So the low amount of buy signals, the low relative strength index, and the potential for an upturn. More interesting is if we are able to break above 11,000, because that will just push us further up, and I want us to see all the way up to 12,000 for a very nice strong close of the week. Now, way too much talking, let's head to the trading tips and see if we are able to pick some stocks that can do good for the next few trading days. So we are at the trading tips, and let's just do a quick recap of last week, because last week I had Zomedica, I had Neo, and I said I would try to buy Chevron. I did. I was able to do that. On Monday I got Chevron from 168.55. It was not the lowest, it was down at 167 something, I believe. But happy with the buy, and early in the week it seemed like it was a perfect buy, because Chevron was up at 176 or maybe even 77, 78 before falling down a little bit, and by the end of the week ending at 168.72. It was not sold out, it still stays in the portfolio with a profit of 0.1%. So the Chevron trade I entered last week is still open with a profit of 0.1%. Neo, however, which was bought in week 48 at 12.90, also did very well. I think Tuesday up at 13.50ish, then fell down. And using trailing stop loss, where the stop loss always is set at the highest price, never follows down, the stock were cut at 12.87, giving a loss of 0.23%. So the Neo trade that we entered in week 48 ended, when all is over and accounting is done, with a loss of 0.23%. I am somewhat happy about that. Of course, I should have taken the profit, but when we run with stop loss, we run with stop loss, and that is just how it is. Zomedica stays open, and no stop loss for Zomedica, and it was just a bad week for Zomedica, ending at 0.18. So currently I sit in Zomedica and Chevron, and here comes this week's tip. Now, before giving you the tips, the risk is high. We are playing on statistics, we are playing on the fact that the buy signals are low, we are playing on the fact that normally, statistically, this last two trading weeks hold good. And we also play on the fact that this trading tip portfolio been very successful, meaning that there is tons of profit to take from. So I can afford to gamble. If you cannot afford to gamble, you shouldn't do it. You should stick to the safer stocks, not gamble too much. I will, however, go for 3 more stocks this week, putting us up at 5 stocks in the portfolio, which is a long time since we have to go back in sorry, in week 43 when we opened 4 trades. And now we will stay, as I said, we will open 3 new trades and stay in total 5 positions. I have found 3 stocks, very different very different stocks, extreme risk, and this may go very well, go very south, or may pan out. Now let's do the obvious first. Let's find the stock that can hold somewhat good with still potential upside, to be that one little bit safer stock. Meta, I will try to get into Meta. We've been trading Meta several times before with good success, so I think it is time to do a Meta trade. Last time was week 45 when we bought for 94.50, selling at 112.80, giving us 19.37% profit. I think there is an upside to Meta. I think the downside should be somewhat limited. So if I'm wrong, the markets go down, I think Meta might hold somewhat okay, not bringing us into a very deep red. So Meta is first trading tips. Then I will go for SIM set IM. It will be interesting, very interesting, but I see a 20% short-term upside. We are gambling on a swing trade here where the stock bounces up. Comes with some risk, but shouldn't be the highest risk. interesting stock. And while Meta is very liquid, the two next stocks are not that liquid. SIM are not that liquid, but still should be enough trading volume. The last one will be highly gamble. We will not put as much into it, but if you are lucky, we can kick off something. It will just be in and out. We will not sit for very long. It will be Exela Technologies, trading around some 10 cents. It will be very risky, and I do not recommend it for the average of you. I recommend it for those of you who have a high risk portfolio, willing to take the gamble. I think there could be an upside, as some of these penny shit stocks usually have a recap during the end of year trading. Not sure it will fall in. If I'm correct, we go for somewhat okay week. The portfolio should be somewhat good. If not, we will have to take some losses. Hopefully not. Is there any other stocks that you can play into? Well, I told you, I think energy and oil will do very good, gas as well, and anyone delivering, especially delivering these tankers and all these things. There are so many things that you can trade. If you know, some of these things are already taken out the potential, but we know there is a cap on the Russian oil, meaning there is a lot of tankers around the world being filled up with Russian oil, just transporting, and that put a huge toll on transport, of course, pushing all the rates upwards, etc., making that an interesting market to trade. There are so many different markets to trade. Now that's it. I don't think that we will prolong it anymore. 5 stocks we will try to keep. We have 2 already. We have Chevron and Medical open, and we will gamble a little bit, trying to get Exela, trying to get SIM, and trying to get Meta, and that will be the most risky trades in this year. Will it pan out? I don't know. We will know. I will tell you next week exactly how it went. You will have it black on white. Until next week, because I will not do any podcasts before Christmas Eve. I really hope you will have a beautiful Christmas, and I will be back in between, and just as best as you can, have a beautiful Christmas, and hopefully put more green into your accounts as we head for the last 2 weeks of 2022. Until next week, have a Merry Christmas and bye.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided, you agree and are held liable for your own investment decisions.